Hey guys, Youthful Yields here. Today we're going to be going over the portfolio for the last week. So yeah, let's get right into it. Um, Basically, for last week, you can see our total portfolio is up 1.15%, and that is above SPY at 1.11%. You can see that most of that came from M1 Finance. The Composer was down, and so was Webull. Um, Composer is only down, I think, a little bit. You can see here on this chart here, it was starting to decline. It went up, I think, a little bit, and it started to decline. So this last week was a little bit boring. Um, but overall, the stats are still looking pretty decent. Obviously, we still have a lot of stuff to go into, um, and a lot more time to go in. So, but looking at the M1 Finance portfolio, we're at 205.79. So a little bit down, as you can see here, we're down. Well, not a little bit down. We actually jumped a lot back down. You can see on the chart here. It's funny because the week before that, we obviously did really great. So I thought we were heading towards good performance. But I think MSTR did something to save their ass, like usual. So basically, every time their stock starts to drop, because I guess people stop finding interest in it, something else comes out. So I think the news this week was that they basically got some agreement to bypass some sort of tax. So, whatever. I know it's a cynical view, but at the end of the day, I lost a lot of money off of them. So, yeah. In our M1 Finance portfolio, we had a pretty good week. So, like I said, you know, 1.79% here. And going into that, we mainly had performance from healthcare, and the main thing there was Eli Lilly, which was really nice. We also had some good performance on semiconductors. Main one there was Nvidia, and we also had good performance on utilities, and the main one there was Next Era. So, yeah. In terms of the worst performers, we had energy. The main loser there was Chevron. Then we have consumer discretionary. Main one there was Home Depot. And then last but not least, we actually only have two sectors here that are down, but technology was there as well. And the loser this week was Google. So overall, pretty good. If we go into the activity here, see if we have any dividends. We did have a dividend from Nvidia as well as Coca-Cola. And I didn't touch base on these last week, so I'll just do the ones since the last buy. But we have Home Depot, pretty big one there. We have Shell. We have Pepsi, Prologis, and then another big one from Coca-Cola, like I already touched base on. And then looking at the overview, unrealized gain, the biggest one we have here is from Broadcom still, then Google, then AMD. All those are above 50% within, only a few months, which is crazy. Super nice. In terms of losers, you can see that we have a lot less than last time. And like I always say every week, a lot of these are going to shift back and forth. So, but the biggest one right now is AMT and Costco. And Vertex used to be a lot lower, I think, on the list. In fact, I think it was the worst last week or something like that. But because of healthcare's jump, it's kind of luckily got up quite a bit. So, yeah. But yeah, you can see here we're up about 13%, unrealized gain of about $2,500. So pretty nice. Moving on to the Composer portfolio, like I said, we're slightly down this week, but overall, nothing like super crazy. I think what was it, like 0.28%, so nothing crazy. Now I did actually add some money into two of them here. So first of all, I actually just got my security deposit back from my old place. I remember, if you guys remember a couple months ago, I was moving, so I finally cashed that check, and with that, I can buy a little bit more. So I'm gonna probably be doing another round of investments pretty soon. And that has nothing to do with the typical 2,000 that we pretty typically put into the portfolio. And again, as a reminder, I might be doing 3,000 from now on, but it's just something we got to figure out in our finances. So now that we're back from our big trip, it's a lot to take care of. So anyhow, basically, you can see here that we have 2007 at 3%, or sorry, 3.02 Sharp. And this one's really new, but I like the idea. If we do a back test here, there's 44% return, max drawdown 10%, and the volatility is also pretty dang low at 12.4%. And all of these are non-specific tickers, like they're not single stock tickers, which I really like. As well as there's pretty low asset list. So anyhow, really like this, looking into it, as well as my other one. Now, the reason I am doing these, and you can see I'm only putting $50 on each, and that is the minimum deposit you can make on Composer for a symphony, is I'm going to show you guys a dashboard in, well, I think I can sign in real quick. So you can see on this dashboard, if I come over here and come over here on the live versus back test, these are my symphonies versus their backtest. So you can see here, if I pop into one of these, you can see this is up since we started about 6.97%, right? That's great. Except that, well, in this circumstance, it's not bad. There are worse ones, though. So KMLM, this is one of the most notorious for this issue, which is it's down 6.83%, but the simulated says it's only down 4%. So that's what this kind of does here. It calculates the difference. You can see that 2.5% there. It also has the ability to show us this chart and how much is deviated, as well as there's tracking error and correlation between the two. But you can see that the best one by just in terms of how close it is SPY. So you can see here how much that's deviated. In terms of the worst one, it's actually modified foreign rat, which is kind of a interesting one. But you can see here that we've lost, quite a bit here. This one's down 1.87%, whereas simulated is actually up. So it's really interesting. But yeah, that is basically it here. You can see that it deviates quite a bit, and so I'm trying to minimize that. And so in doing so, you kind of somewhat have to get an idea of how things perform in live. Now, you can get a general idea based on what it's trading, and more importantly, what kind of indicators it's using, and that's what's the cause of this, right? So super specific stuff is going to be super hard. This one's not super specific. It's just that some of the stuff that it trades is a little bit hard on it's very volatile during the day. So between the last 10 minutes of that market day, it can move quite a bit. So now with other ones like my algorithmic selected one, as well as this one, it's potentially the same. I have theories that this one's going to perform well, as I think this one's going to perform equally as well. I need to look over this one just again, but you can see the only thing here that I'm a little bit worried about is you can see here, they're all 10-day RSIs, but it's pretty typical for this the community. But you can see 80, 80, 79, 79, 79, 77, 62, 4.75, 30. Yeah, I mean, like, my point is this 79, 77, 62, those should be roughly the same. Now, this one's a little bit different because it's a 70-day RSI. But there's no reason other than being overfit that this is 77. So that's why I'm a little bit weary, and that's why I want to test really how volatile this is. And unfortunately, to my knowledge, Composer does not give us the option to actually, basically use paper money, which is interesting because the platform that they use for trading is Alpaca Markets. And I know because I've used them myself, they have a paper trading portfolio that you could use. So, you know, I think that they should do this. It probably comes down to some weird like compute thing, but it would be cool if you can make a new account where it's paper and maybe you're limited to only having 5 symphonies or something. But that would allow us to, that would allow us to basically see, you know, in actual live performance, how well something is doing. Because these back tests really don't mean a whole lot at the, in the broad scheme of things. If realistically, if something like this is going to happen, where it's a 2.5% difference or something like that, or even worse. So anyhow, guys, that is it from me, and I think next week, you know, these results should be in. It's not like a super long time. These ones have been going for a little bit, and you can see, starting off, they were doing pretty well, um, and then over time. But I mean, even this, like the first, 3 days, and then it kind of separated, and that's all it takes, right? Because then this might be going up and this might be going up, but the spread, like here is what caused the initial one, and it started tracking pretty much the same. But then the same thing happened here. You can see this went up, this went down, especially on a one like this, because all this one does is trades between two different thing ETFs, and I'll kind of show what that looks like. But it's between EDZ, EDC, and EEM. But I think very little, and Bill almost always has been in just 100% EDZ and 100% EDC. So, but we'll see how they perform in the next week. Like I said, I have quite a lot of faith in my strategy, but I did in this strategy, and not to say I'm gonna abandon this one because this one's not doing terrible, but obviously it doesn't have a lot of data because, as I touched base last video, this one only goes back to 2022, and that's why I'm trying to play with these ones that have a little bit more data. Obviously, the annualized return is a lot lower, but it doesn't have, you know, I think I said 2020, but 2022. It doesn't have like super picked years, and it also doesn't really have, such limited data. So anyhow, that is it for me, and as always, I wish you guys well to the future.